I think that the whole banking system will undergo a certain amount of change. We see that with the new Basel III regime. We'll see it in terms of liquidity and capital and some of the requirements around how you operate as a bank. I think one of the big changes will be that regulators will look not just at individual institutions and what they're doing, but at the system, what the activities of individual institutions, what effect they have on other banks in the system. They need to look within, they need to look across as well. Overall, for banks, I also see perhaps a greater variety in terms of larger banks, which do many things, and smaller, more community-based banks. I see that as a trend over the next 5 years and even longer. There is a very interesting debate about remuneration in bankers. The first thing I would say is that the vast majority of bankers, I mean, there are, what, 1 million people in the UK who work in financial services. A vast majority don't receive very high bonuses at all, and I think it's important to point that out, particularly on their behalf. I think what will happen with remuneration over time, and it's beginning to happen, and it's not just within banking, but in other big corporates as well, is that the remuneration regime, the compensation, what's proposed in terms of incentives and bonuses, will relate quite distinctly and quite transparently to the company's strategy. So it will not only reward performance that has just happened, meaning short-term performance, but it has to be shown to relate to the business's strategy, which means it has a longer-term element. I think that's the big shift that we'll see. I think that one needs to look at that in a slightly different context. What you've just asked is exactly how the debate has been couched for the last almost 2 years. In fact, what the governments do in any country, they need to keep the economy flowing. So they will step in if there are issues around payment systems, for instance. It's not their job to pick a large bank and say, we'll save this or that one. I also do not believe that, I don't know any bank that sat there and said, we'll take lots of risk because we'll be bailed out. I don't think that's how people thought at all. But one does have to look at what is that tipping point between what individual institutions do, how they affect the economic, financial stability, and where a government might have to step in. It's a very fine balance. Well, actually, we've done a great deal since we acquired HBOS, which was the beginning of 2009. I mean, actually, on day one, the first thing we did was to impose the Lloyds, what we call risk appetite, so that the entire institution was operating to the same guidelines in terms of credit. We have embarked on what is the biggest integration of 2 corporates in Europe, and that's proceeding ahead of schedule, and it's looking very good. What we're working very hard to do, in fact, this is something that I'm doing up in Scotland in particular, is to try to restore and sort of refurbish that brand Bank of Scotland, because the H is now dropped off from the name, and that all has to do with an institution that in the past was highly respected, that looked after its customers. That's the focus we're putting in now. Gosh, I think probably one of the few truisms in the world is that there will be another banking crisis at some point. I think without being an absolute historian of these things, ever since the Industrial Revolution, we have periodically had banking crises, and in fact before that as well. So I'm not sure we can absolutely avoid one, but I do think that something good comes out of what we've been through recently. A lot of the people who have worked for me, for instance, would have had 10, 15 or more years without ever having seen an economic bust, if you will, the down part of an economic cycle. And that means that as bankers, although you can train them and tell them you need to think about certain things, they wouldn't necessarily do that instinctively. I think everyone who has lived through this, which is another generation of bankers, will look at how they do business differently. And I think that carries us through, I hope, for a period of time. I think that corporate responsibility is fundamental to having a good and a successful business. I mean, if I talk about it from my own world, in my bank, we draw our customers, we draw our staff from all over, from the entire country. It makes sense for us to ensure that we help strengthen society and help solve some of society's problems in order to have a strong business ourselves. So I think that there's an economic argument for business to be involved in corporate responsibility as well as a so-called feel-good one. A lot of your staff like to engage in that way. I think some might instinctively think it's harder because we tighten our belts and so forth. Actually, during lean times, two things matter. One is that it's probably never more important than then to pay attention to your corporate responsibility obligations and to keep focused there, because that's when parts of society may well fall back and you have more to do down the line if that happens. But the other thing is that in lean times, very often one sees all sorts of enterprise developing. You see a lot of new businesses starting up, you see people out of business going into other things. That can happen in areas of deprivation as anywhere else, and actually very often happens more frequently there. So it's actually a time that could be quite fruitful in terms of development and improvement. I think that, first of all, that leadership needs to change for the circumstances. So there's something about really being tuned in to what's going on, what's happening, what your industry needs, what your staff needs, what your stakeholders and your customers are interested in. You need to pay attention to all of your stakeholders. I think that's one thing. I think the ability to listen is enormously important. Too many people believe that leadership is about standing up and having the answers, even when you don't. I think probably the most important thing for leadership is being able to say to a group of peers or a group of staff, actually, I don't know the answer. What do you think? Digest that and then somehow synthesize what you've heard and come out with the way forward. I think that all of these relationships between the board and the chairman and chief executive, if conducted properly and with mutual respect, can help ensure good governance. It's really important that a chief executive of a company is not so powerful or so obtuse in the way they describe what they're doing that the board cannot understand that. If that is the case, then the chairman certainly has to say to the chief executive, you'll need to explain things differently. The board has concerns it doesn't understand. I think that for a chief executive as well, there aren't many peers you can go to if you're thinking something through. If you have a worry or a concern, who do you turn to? And very often you can turn to your chairman, who has a different perspective and perhaps has some wisdom to offer. I'm asked often about glass ceilings and about women in business and women in sort of senior leadership roles. It's a very difficult question. It's been around for decades, and yet we somehow haven't seemed to solve it. What I often say if I'm talking to a group of women, women managers or women in business, is that as soon as women start talking about a glass ceiling, whether or not it exists, as soon as they do, they've in essence given up, because they're basically saying there's an effect out there, and we see it, and therefore we can't ever get past it, or it's really hard. Women have to aspire, they have to have ambition, they have to see themselves in that job, and they have to be willing to work really hard, because most senior jobs involve very hard work. That isn't to say that they don't, but they need to see themselves doing that. What I look for in people that I hire is that they are literate, that they're numerate, that they can communicate, and that they can imagine. And those may sound very odd things to look for. I try very hard to avoid people who've studied business and just business as an undergraduate, because they can learn a lot of that with me. What I really want is people who can come in and actually grasp and understand and think about the business. They shouldn't assume they know it all because they have an MBA. That's really important, because every business and every company will have different views, possibly, than they have learned. That they should be willing to listen and to keep learning, that the learning doesn't stop just because they have their MBA. And that, above all, I hope that they have learned how to, communication is fundamental, that they can write with clarity, that they can express themselves verbally. And if they don't think they have that, and whether it's an MBA or any other kind of program, they should work hard to try to get those skills early on.